India is on the cusp of a significant tax reform. The government is poised to introduce a new income tax bill in Parliament on February 13, 2025. This landmark legislation aims to replace the existing Income Tax Act of 1961, which has been in effect for over 6 decades. The new bill, known as the Income Tax Act 2025, is scheduled to take effect from April 2026. The existing Income Tax Act, while having served its purpose for many years, has become increasingly complex and cumbersome over time. The new bill seeks to address these challenges by simplifying the tax structure, improving ease of compliance, and modernizing the overall system. This move is expected to benefit both taxpayers and the government, fostering a more transparent and efficient tax regime. The proposed changes are wide-ranging and touch upon various aspects of the income tax system. These include a revised tax slab structure, updated exemptions and deductions, and measures to simplify tax administration. The government's objective is to create a tax system that is in sync with the needs of a rapidly evolving economy and promotes greater taxpayer confidence. This comprehensive overhaul of the income tax system is a testament to the government's commitment to fiscal reform. By simplifying the tax code and making it more user-friendly, the government aims to encourage voluntary compliance and broaden the tax base. This, in turn, is expected to boost revenue collection and support India's economic growth trajectory in the years to come. One of the most significant changes introduced by the Income Tax Act 2025 is the revised tax slab structure. The new slabs are designed to provide relief to taxpayers across different income levels while ensuring a fair and progressive tax system. Let's delve into the details of the new tax slabs for the financial year 2025 to 2026. Under the new regime, individuals with an annual income of up to 4 lakh rupees will not have to pay any income tax. This zero tax bracket is a welcome move, particularly for low-income earners, as it provides them with greater disposable income. For income between 4 lakh and 8 lakh rupees, the tax rate has been set at 5%. This gradual increase in tax liability ensures that the burden on taxpayers rises proportionally with their income. Moving up the income ladder, individuals earning between 8 lakh and 12 lakh rupees will be taxed at 10%. The subsequent slabs follow a similar pattern, with the tax rate increasing by 5% for every 4 lakh rupees increase in income. This progressive structure ensures that those with higher incomes contribute a larger share of their earnings to the national exchequer. The highest tax slab of 30% is applicable to individuals with an annual income exceeding 24 lakh rupees. This rate is in line with international standards and reflects the principle of equity in taxation. By adopting this tiered approach, the new tax slabs aim to strike a balance between revenue generation and providing relief to taxpayers. The introduction of a zero tax bracket for individuals earning up to 4 lakh rupees is a significant highlight of the Income Tax Act 2025. This provision effectively exempts a substantial portion of the taxpayer population from paying any income tax, providing them with much-needed financial relief. This move is particularly beneficial for low-income earners, such as daily wage laborers, small vendors, and entry-level employees. Previously, even those earning minimal incomes were subject to income tax, albeit at lower rates. This often resulted in a significant portion of their earnings being deducted as tax, leaving them with limited disposable income. The zero tax bracket addresses this concern by ensuring that individuals below a certain income threshold are not burdened by income tax obligations. This move is expected to have a positive impact on the lives of millions of Indians. With more money in their hands, these individuals will have greater financial flexibility to meet their basic needs, such as food, housing, and education. This, in turn, can contribute to an improvement in their overall standard of living. Furthermore, the zero tax bracket is also expected to boost consumption in the economy. As individuals have more disposable income, they are likely to spend more on goods and services, stimulating demand and economic activity. This can have a cascading effect on various sectors, contributing to overall economic growth. In addition to the revised tax slabs, the Income Tax Act 2025 also introduces changes to exemptions and deductions available to taxpayers. These provisions are designed to reduce the overall tax burden and encourage individuals to save and invest. Let's delve into some of the key changes in this area. One notable change is the increase in the standard deduction limit for salaried individuals to 75,000 rupees. This deduction is available to all salaried taxpayers and is subtracted from their gross salary before calculating taxable income. By increasing the standard deduction limit, the government aims to provide relief to salaried individuals and acknowledge the rising cost of living. The new bill also retains provisions for deductions on employer contributions to the National Pension System, or NPS, and the Employees Provident Fund, or EPF. These contributions are eligible for deductions up to a certain limit, encouraging individuals to save for their retirement. This not only promotes financial security for individuals, but also mobilizes long-term savings for the economy. Furthermore, the bill introduces a provision that allows taxpayers to offset their housing loan interest against rental income. This is a welcome move for individuals who have rented out their properties while simultaneously paying EMIs on housing loans. By allowing this offset, the government aims to provide relief to such taxpayers and acknowledge the financial burden associated with homeownership. Section 5. Streamlining tax administration. Beyond the changes in tax slabs, exemptions and deductions, the Income Tax Act 2025 also focuses on simplifying tax administration and enhancing taxpayer convenience. The bill introduces several measures aimed at reducing paperwork, minimizing disputes, and making the tax filing process more efficient. One significant change is the replacement of the terms previous year and assessment year with tax year. This simplification in terminology is intended to reduce confusion and make the tax code easier to understand. Additionally, the bill empowers the Central Board of Direct Taxes, or CBDT, to frame tax administration rules and introduce compliance measures without requiring frequent legislative amendments. This empowerment of the CBDT is expected to streamline the tax administration process and enable quicker responses to evolving taxpayer needs. The bill also extends the deadline for tax audit filing to October 31st and income tax filing to November 30th. Providing taxpayers with additional time to fulfill their tax obligations. The Income Tax Act 2025 represents a significant step towards modernizing India's tax system. By simplifying tax administration, the government aims to reduce the compliance burden on taxpayers and create a more business-friendly environment. These measures are expected to enhance taxpayer satisfaction and foster a culture of voluntary compliance. Now, let's delve into some insights and perspectives on the new income tax bill. The bill, as it stands, has the potential to reshape the financial landscape for millions of Indians. By simplifying the tax code and closing loopholes, it aims to create a fairer system for all. However, there are concerns about its implementation and the potential burden on middle-class families. It's essential to weigh these factors carefully as we move forward. Implementing the new income tax bill will be a complex process, requiring coordination between various government agencies and stakeholders. The impact on the economy could be significant, with potential benefits including increased tax compliance and revenue. However, there are also challenges to be addressed, such as ensuring that the new system is user-friendly and accessible to all taxpayers. The success of this bill will depend on effective execution and continuous monitoring. The new income tax bill represents a step towards a tax system that is more suited to a modern India. In today's fast-paced and dynamic economic environment, it is crucial to have a tax system that is both efficient and equitable. By embracing technology and streamlining processes, the bill aims to reduce the administrative burden on taxpayers and improve overall compliance. This is not just about collecting revenue. It's about building a system that supports growth and development for the entire nation. As we conclude, it's important to remember that the success of the new income tax bill depends on the active participation of all stakeholders. Whether you are a taxpayer, a business owner, or a policymaker, your involvement is crucial. Stay informed, provide feedback, and work together to create a tax system that benefits everyone. Let's take this opportunity to build a brighter financial future.